Recording, so we are recording now. I'm going to turn off my video and audio, and then we'll get started.
Good morning, everyone, and welcome to our chamber chat this morning, Growing and Maintaining Your Business by Financing the Right Way. Good morning. My name is Jennifer Brown. I am the Director of Business and Industry here at the Regional Partnership and the Chamber of Commerce. So I am thrilled to offer this opportunity and bring together some industry experts, some panelists here this morning. As many of you know, our small business community is definitely experiencing some needs in this time during COVID and certainly outside of COVID, but some needs and challenges that we know need to be addressed certainly they're facing they're seeking financial assistance during this time. Whether it's COVID or not, our small business community certainly is looking for opportunities to reach out to lenders of many different types, and we want to make sure that they are ready and make smart decisions, business decisions in order to be set and ready to go. And we've organized some panelists. As I said, they are industry experts, and we think they'll be, we know as industry experts with collective expertise of over 100 years. Tony Bush, Pat Lowney, and Paul Dozier are here with us today, and I'll let them give an introduction. But we're really excited again to have them here with you to share their expertise and really talk a little bit about cash flow and how that will help connect you with financing, and whether you're a partner or whether you're a small business seeking, whether you're a startup or you're a small business that is seeking some financial assistance, or whether you're a community partner that is working with small businesses in the community and needs to connect them with resources. We certainly want to make sure that you do have the resources that you need. And this presentation will be recorded. We will have opportunities for you to ask questions, so you can certainly do that in the chat box and the chat feature. You're also welcome to raise your hand and ask those questions. We want to make sure this is an open forum as well, so please feel free to do that. And then, as I mentioned, this will be recorded, and we will make this available on the chamber page. And I did not mention this, and certainly Tony, Pat, and Paul, I'm sure will mention this, but they are SCORE mentors, and so we'll make sure that this information is available on any platform or community partner that they are volunteering their time, because I know they're generous with their time. I didn't give the full introduction for each and every one of them, but I'm sure that they will be happy to do that. So why don't we go ahead and get started with introductions by our panelists, and then with the presentation. So I am going to be handling advancing the slide deck, but I will hand it over to Tony.
Thank you, Jennifer, and good morning, everyone. First of all, I'd like to just thank Jennifer for her tremendous support and the Chamber of Commerce in putting this chat together in support of the workshop that Pat and Paul and I have developed to help business owners understand their cash flow and build a mutually beneficial banking relationship. My background is I was a business lender. I started banking in 1973 and ended my career in 2003. I worked my way through a lot of credit departments, became the president of a community bank for a while. And then in 2003, I started my company, Priora Cash Flow Management. Priora is a Latin word for priority. Cash flow is a priority. And I work with business owners and lending institutions in several states, helping them understand cash flow. So I help the business owners borrow money, and I help the lenders lend money And I've developed software systems that the business owners can use to understand their cash flow, and lenders can use to underwrite business loans. So I've got a lot of good experience, and we've developed a workshop that's going to launch September 14th. It's going to be 4 weeks, Monday evenings, the 14th, the 21st, the 28th, and October 5th. We're going to cover today some of the topics and themes that we're going to be discussing in greater detail in that workshop. We encourage you to sign up for the workshop if you're in business and you want to borrow money from the bank or build a stronger mutually beneficial banking relationship, how to negotiate with a bank. We're going to be covering a lot of that material, and we'll be skimming over this morning some of the topics in that workshop. So Pat, you want to take an intro here, make your intro?
Sure, I'm Pat Lowney, and I also worked for a credit union for 32 years. I was a CEO for 21 of those years, and I'm a certified public accountant on top of that. So I've got a lot of background. We built over the 21 years that I was a CEO, we grew pretty significantly, and also started and built a nice little commercial lending department. So I've got 8 years of experience in commercial lending also. And we're combining those kinds of talents and backgrounds, trying to transfer what we've learned and what we know and things from the banker side of the table over to the small business side of the table. So it's pretty much who I am.
Paul?
Yeah, I have been enjoying the joy of accountancy for over 50 years now. Somebody quizzed me a while ago. In a variety of, under a variety of hats, much of it in public accounting, and for 40 some years in the Denver metro area. We moved to Appleton about 3 years ago. So I got qualified as a CPA in the state of Wisconsin in that process. But I've been, as I say, in a number of public accounting firms, including my own over the years, including some of the biggest in the country. And in addition to that, private industry and manufacturing and transportation, service industries, etc. So, and as Jennifer said, I'm also a SCORE mentor, and I see a familiar face on my screen here down there at the bottom. Teresa, how you doing? Good to see you. So anyway, I'll turn it back over to you, Jennifer, or Tony, who's
Thanks, Paul.
all I've got to say.
Sure, thank you. Again, special thanks to Jennifer for helping us get this chat going this morning and helping to support our workshop coming up in September. Small businesses really are the backbone of our economy, and they need to succeed in order for our economy to continue to grow and prosper. Our economy's recently been hit pretty significantly by COVID. It's causing a lot of financial distress in a lot of companies of all sizes. Some companies will make it through this and other companies will not make it through it. It's like any other economic downturn. But what most successful companies do is they budget and manage their cash flow, which includes profitability. And the business owners really, especially the smaller business owners up to like 10 or $20 million in size, they're the ones who employ a lot of people. They come up with a lot of innovations. They generate many more patents and copyrights than the large corporations do. Collectively, their payroll is much larger than the big corporations combined. So business owners need to understand the cash flow of their company. How much do I need to get through this COVID episode? And how much can I afford to repay? Sometimes it's easy to borrow money because the lenders are willing to lend it or grant it to you, but repaying that money can be very difficult. So we want business owners to basically understand how their daily business decisions generate the cash flow of their company. Successful companies do that. They do it very well. They've mastered it for their company. It's a constant learning experience, and it's nothing to be afraid of. So in the workshop, we're going to be taking 3 weeks, 3 hours a night for 3 weeks, and we're going to be teaching people how to understand financial statements, the income statement, the balance sheet, the statement of cash flows. We're going to be teaching them how to structure debt for their company, how to negotiate with banks or lenders if they need to borrow the money. We've put into this workshop a lot of inside, back alley, behind the scenes thinking that banks do when they underwrite business loans for business owners. And for example, bankers will put together a risk rating score for every business loan they have on the books. Like your personal credit score, there are certain components that a banker is looking at that include components of the business as well as you personally as the owner of the company. Many times in a system I developed for underwriting loans, we measure 9 dimensions of a company, and those could range from how well is the cash flow, how strong is that, to how long have you been a customer of the bank. Each one of those components carries a certain weight, and through a pretty simple calculation, they come up with a score. The banker's scores usually are something like excellent, good, and satisfactory. Those are the 3 acceptable scores. And then number 4 would be watch, substandard, doubtful, and loss, going down the tubes if your company's not doing well. We go through how those calculations are done in the workshop so the business owner can understand where they need to focus their attention in their company to present to the lender the type of business that they want to lend to, that they feel safe that that loan will be repaid according to the terms of the note documentation. And lenders are really critical, successful they're critical partners to successful businesses. I don't know of any company that's really grown substantially without having some sort of a banking relationship. And that banking relationship has to be mutually beneficial. So we're going to teach business owners how to negotiate different terms of the loan, collateral, interest rates, understanding interest rates, debt structure, terms of the loan, personal guarantees. All of this is important for the ongoing business to grow and survive through these times and almost any time that comes along. What's interesting is back in 2008, when the mortgage crunch hit, someone did a study of the Inc. 500 and the Fortune 500 companies, those 1,000 companies. They determined from those 1,000 companies that 600 of them started in an economic downturn or a recession. And that it's very informative to understand that, because even though we're going through a tough time right now and companies fail, innovative, creative, entrepreneurial people come up with a new idea for a product or service that satisfies the need right now. And that company could end up in the Fortune 1000, being 1,000. So don't be discouraged by the downtimes, deal with it and look for opportunities that exist. The other point I'd like to make about the importance of cash flow is that every business owner should have in the back of their mind, and as they stay in that business for a number of years, the longer they're in it, the more that moves from the back of their mind to the front of their mind, is how do I sell the business? How do I get out? What's my transition? Do I have children who'd like to buy it? One of my employees want to buy it? Or do I go to market with it? So cash flow is what buyers of a business buy. They're buying the cash flow. That makes up the return on investment. Every shrewd buyer of a business will ask, how long will it take me to get the money out of that company to pay me back for what I paid for the business? 10 years, 20 years? And the better the business owner understands their cash flow, the better price they're going to receive when they sell that business. And I bring a strong banking background to this workshop. I've done a lot of business loans in my career. There are a lot of ways to structure debt that are beneficial to the business owner and to the lender. And one of the things we cover in this class, this workshop, is we do a pretty in-depth dive into the financial statements. Pat, would you like to talk a little bit about the financial statements, and then maybe Paul would like to follow up with some emphasis on the balance sheet and the statement of cash flows.
Sure. So really what we're talking about is the business owner has to have an understanding of their basic financial statements, the balance sheet, the income statement, and the statement of cash flows, so they understand, exactly where they're at and how those tie together. And again, then as Tony was talking about, how that ties into the cash flow. So there are different techniques that we'll explore in the workshop that help you decide whether you should be working on some things in your balance sheet to help you get in a better position to be able to afford some of the loans that you may be looking to take on, or if there's some things you should be doing that maybe would help make it easier to afford the loans that you're doing, and then the impact that those decisions will have on the income statement and then onto the statement of cash flows. It sounds complicated. It's really not. It doesn't have to be. One of the key systems, I think, is that you have to have a decent accounting system. And that, if you're using something like QuickBooks or there's a number of products out there that help you with that kind of thing. And a relationship maybe with an accountant that's helping you with payroll and taxes and things like that. Get those statements working for you so that you're getting good, correct information. Because what we're really working for, and what we're going to show you in this webinar or in this series that we're going to be doing workshop, is how to start forecasting and be able to show your banker that you understand your financials, and they can then rely on your forecast also to have some comfort that yes, you really can make the payments and that you know what's going on, and they then can be comfortable that you're going to be able to make the payments on the loans that they have with you. So Paul, do you want to continue?
Yeah, I can just pick up on that a little bit, Pat, that just to say that the financial statements in terms of their weight in persuading or evaluating a business that's sitting across the desk from a banker and applying for a loan, financial statements are probably 80% of that weight from what I've been able to discern in other places. So that should tell you that if you're serious about starting a business or growing your existing business, that you have to pay a lot of attention to that. And what Pat said is absolutely essential, a necessary condition, and that is keeping the books timely and accurate, however you do it. And if you're doing it yourself, you need some outside oversight on that on a periodic basis, whatever it might be, from a professional accountant perhaps, or CPA. And as to really getting up to speed on understanding how to evaluate your position of cash, that's what the balance sheet does. It's a statement of your financial position. And the statement of cash flows highlights three main activities that, along with the income statement, result in that statement of position. There's your operating activities, investing activities, and financing activities. And all three of those impact cash flow. So it's important not only to look at each of these things individually, but to understand the relationships between all of them. And that's where a lot of these ratios come into play that Tony's going to put a lot of emphasis on, I think, here. So as to help understand the relationship between elements in the income statement and elements in the balance sheet, and some signs to look for in terms of how you're progressing in the overall in generating cash, which ultimately is the indication of your profitability, is your ability to generate cash. So that's all I got to say about that.
Thanks, Paul. Thanks, Pat. Teresa,
Unless
at this
Jennifer has
point,
any questions.
yeah, Teresa, do you have any questions at this point?
You're on mute, I think, Teresa. There you go.
Yeah, I just had to figure that out again here.
Yeah.
No, well, yeah, I've got a ton of questions. I would love to just sit down and chat with you because I'm ready to buy the building that I'm in. And I was
Okay.
looking at, I was at one of your other, where you gave a little speech, Tony, and you were talking about some banker that does SBA loans.
Mhm.
And so I'm ready to make that purchase, and I need to do that within the next couple of months because she's closing the jewelry store.
Mhm.
So I want to take that over, and I've got, my business is growing like crazy. I'm in a position, but because the first 2 years I started the company from nothing, I mean, it was nothing.
Right.
So I made a lot of mistakes. I didn't find people to help me because I didn't want to spend the money to get the help. And so I tried doing everything myself and was just frustrated. And so then I ended up getting a biller now to deal with the insurance companies. And that has made all the difference. And that I started in January. So I really don't show, and I got a bookkeeper too. So I've got a bookkeeper now, and I've got a billing lady, and all that has made, I wish I would have done that right from the start. I wish now I know, but I didn't know at that time. I was afraid to spend the money. So now that I've got a really good clientele base, I've got a good reputation in the community. People are starting to send and refer to me quite a bit. Now I'm ready to take on an intern. So that's going to start. So now I'm going to have employees, so that's going to start soon. There's just so much going on. I'm overwhelmed. But it's a good feeling to be overwhelmed,
Yeah.
But I don't want to lose this building. This building is going to make all the difference to me in how this all comes together and
Are
grows.
you renting in the building now?
Yes.
Okay. So is your landlord.
Yes. And so I
Do you do
want
a budget? Do you prepare a budget every year for your company? 12-month budget?
I didn't because I didn't know what I was doing, Tony.
Sure. Yeah.
I mean,
Well,
I
you're
had it
growing
in my
now.
mind. I was spending every waking hour just growing the business
Mhm.
and just planting seeds in the community. And that's what I've been doing. And these seeds are all starting to grow now, but these little plants need to be attended to.
Right.
And so now I need to hire people to attend to these plants and bring on more individuals. And I should be able to hire maybe 3-4 people once I get the building.
Mhm.
And so, that's going to change everything. That is just going to explode this whole project.
One
So
of the
Tony,
dynamics-
Tony, I'm sorry, do you see that it's common? I think that Teresa's not alone in making a budget for her business, right? I think that's common. And so it's great that she's in the position she is, that she's in a position of growth and ready to take on more, but also she has some, she's also in a position where she needs to make some decisions and take on the building. So I want to commend her also for the position that she's in. It's exciting.
It's
It
very
is
exciting. And Teresa, one of the principles of business growth is growth costs money. It costs money to grow your company. So it's really important to put a budget together, and then you can determine the rate of growth and a profitable growth. And bankers are going to want to see that. If you go to the bank to borrow money for a building, they're going to want to see, what do you have in mind for growing your company? How are you going to pay for the building? What sort of volume are you going to do? Who are your customers? How is that going to expand and grow? And what are the profit margins going to be? those are the things you are facing are perfect for this workshop we're launching on September 14th.
I see that. I see it.
Unfortunately, it's a month in, you have 2 months to buy the building.
I know. I have to do
Yeah.
this now. I need to.
Yeah.
Yeah.
So, but we do go into SBA programs in this workshop. We talk about the
I
7E
see
program and the 504 program. If your building is going to cost over $500,000, you're a wonderful candidate for a 504 program. And that gives you about 40% of your project cost at a 25-year fixed interest rate of under, it's like 2.6 or 2.7%. So it's a wonderful program for folks like you to fund the acquisition of capital assets, buildings and equipment. And you want to, and most of the banks around here and credit unions do SBA lending. So you really probably want to look at that in depth.
I got denied twice by the banks because I didn't start with getting the billing and the budgeting and the accounting done until January.
Yeah.
So they want to see a whole year of growth.
History.
And
yeah,
and I don't have that right now, which is putting me into a bind because I need to be able to make this happen. So I went on the SBA website and I signed up, and they contacted me and they wanted 6 months of my banking statements, and what else did I give them? Oh, and I had, an application. And so I'm in the process of doing that right now.
Sure.
So I don't know if I should go through the SBA website or if I should use somebody here in the community.
Well, SBA loans are done, 7A loans are done by lenders, and the SBA guarantees the loan. They won't lend you the 7A money. And if you're going to do a 504 loan, you need to have a bank as a partner with the SBA. So a company called Wisconsin Business Development would be the SBA representative. They actually underwrite the loan for SBA to get the guarantee on the debentures that they sell to fund that 40%. And then the bank is doing their 50% of the project. So you need a bank partner and you need WBD, but the bankers know how to coordinate with WBD. You don't have to do all that work, but it's important you understand what's going on. And debt is a huge burden on the cash flow of any company, whether it's long-term debt or short-term debt. So it's really important to understand debt structure. I always encourage people to take the longest amortization they can get. If they can get a 25-year, get it. You can always make it a 15 or 20-year by making larger payments every month. But you only have to fall back to a lower payment if times get tough for you, and then you won't be in default on a loan. So always take the longest amortization you can get. Prepayment penalties do exist out there, but they're very manageable. SBA has reasonable prepayment penalties on their 7As, and they do have a 10-year prepayment penalty. For 10 years is a prepayment penalty on the 504 SBA portion, but the bank's 50% portion is usually at a higher interest rate. So if you can afford to pay a loan down, pay down the higher portion of the loan, don't prepay the SBA portion. So a lot of
Tony,
Tony,
do we maybe want to get deeper into the presentation and then,
sure.
Go through the presentation and then see if we have, we're able to answer some of the questions that Teresa has or have some supporting answers? I think that would be a good plan. And then maybe there's some things that we go through and then we can provide some other resources to Teresa.
Yeah, right on the screen you have there, Jennifer, the second bullet point, opportunities will abound. Out of tough times, everything changes. Buyers' habits change, lenders' habits change, business owners' habits change, but we need to be watchful for opportunities. Now you have an opportunity in front of you, Teresa, to purchase a building and significantly grow your business. What's the next slide there, Jennifer? Next slide. This is just a quick look at cash flow from a high level. The assets of the balance sheet are what are used to generate the sales of the company. The expenditures of the company are the costs of supporting the assets and paying the liabilities. And what's left over is a profit. So if we had 100,000 of sales, 80,000 of expenditures, we'd have a $20,000 profit. And we can only do three things with our profit. We can buy more assets, we can pay off some liabilities, or we can take it all in an owner's draw. But we want to maintain efficiency and balance in our company, so we might do a little bit of each. And the point of this illustration is if people are not putting a budget together and monitoring the performance of the company every month according to what the budget was, what the goals were in the budget, we're not going to know where we are during the year. And we can end up in the end of the year having bled out a lot of money. Paul mentioned the three dimensions of a company. You may have receivables that you're collecting in 92 days and you're paying your payables in 60 days. You don't want to do that. And if you're not doing a budget, you won't know you're doing that. So it's important to understand how your business is operating. So cash flow is important. Next slide, Jennifer. Startups versus established businesses. Teresa, you're an established business. So the history helps when you're going to the lender. More lenders are drawn to established businesses than they are to startups. It's really hard to get a startup loan today. And if you do, they're almost always going to use SBA programs. Projections are still required. You need to project the next 12 months. And they're probably going to ask you for the first year in 12 months and the second year out in an annual and the third year out in an annual. But that first 12 month is important. And what's important about those projections is not only the sales every month and all your expenditures every month, but your thinking behind the numbers. So you have to write down, why is your payroll going to do this? Why is your marketing going to do this? Why are your loan payments going up or down? That's the reasoning that the lenders are going to use. I think it was Paul or Pat mentioned that 80% of a business plan is the financials. And that includes the projections, because that's how lenders get repaid. So usually the better positioned to negotiate more successfully. So companies who have a business plan, they're able to negotiate better with the lender. And more lenders will want to borrow or lend them the money because they're a quality loan now because they understand the company better. Next slide, Jennifer. Okay, we just went through this. 80% of the business plan is financial data. The other 4 pieces are management, description of the business, what's your marketing plan, and what's your executive summary. That's what business lenders like to see. This is a quick slide on break-even analysis. We're not going to cover this right now, but when companies go into business, they do their accounting side. They project their sales, they project their expenditures and their profit, their cash flow. But the other side of the company is this leg over here, and that is, how many widgets do I have to sell at what price to make what profit? That's really important because it tells you that your costs and your profitability are based on your projections and the assumptions. And then you compare that to the competition to see, are you out of line with the competition? Are you better than the competition? But your profits are not going to generate in your company unless you understand your break even. So we go through that too. Next slide, Jennifer. Debt consolidation strategies. As businesses grow, they accumulate a loan for this, a loan for that, some credit card debt, a line of credit, whatever, cars, vehicles, equipment. And eventually you might have 4, 5, 6 loans on the books. It's time to look at, is there a benefit to consolidating the debt? And in this example, I'll just point to you the lower option number 2, the loan option, new loan option number 2. If you look at the monthly payment column, the payment dropped roughly $550. And that whole program cost you $141,000 compared to the $140,000. So it only cost you an extra $285 to consolidate all loans into option number 2. But you got a $550 savings, and the least number of remaining amortizations in this table is 14 months. 550 for 14 months is over $7,000 improve cash flow for 14 months. We would have never known that if we hadn't done the exercise. So debt consolidation is important. We go through personal credit scores. Next slide, Jennifer. Cash accounting, accrual accounting. This is where the CPAs in the group can really shed some light on this. If you have inventory, you're pretty much required to use accrual accounting. And accrual accounting is really a better way to manage what's happening in the cash flow of your company rather than cash flow or cash accounting. Next slide, Jennifer. I always promote business owners go to 5 to 10 lenders. Put your business plan together, know your business plan, understand what's in it, and go to 5 to 10 lenders. It's like going to work for your very first job. I remember when I was a kid and I went to interview for my very first job, I was really nervous. And the employer saw I was nervous, but I went to 3 or 4 other grocery stores to get a job. And each time I went there, I got better at applying for the job. I was a little more confident. Same with applying for a bank. Excuse me. We give you a script to use to follow in talking to the lender, but we want you to establish like who is going to do what and when. Not all bankers are going to do the same thing. They're not going to do it at the same time. So you have to, we help coach you in understanding how to negotiate with a bank. And in week number 4 of our 4-week seminar, you actually present your business plan to a real live lender in front of the class for 15 to 20 minutes. And that lender will approve it, deny it, table it. They'll tell you why. And they're going to give a critique on how you did in your presentation. And then you've got the 3 of us coaching you during this workshop, not only on the Monday nights, but if you have a question on what we covered in the second Monday night, and it's on the financial statement, Pat, Paul, and I will be available to you as part of the cost of the program to tutor you on that ratio, so you can get a better understanding of that. So we're going to fill in the gaps between the weekly sessions. We want everyone to finish the program and get that certificate of completion. Next one slide. Next slide, Jennifer. SBA, we talked about that. This is the, yep, next slide. This is the risk rating that the lenders do. These are the 9 dimensions that we measure your company, and we provide you with a score. It comes off the system I developed that's been used by lenders for 12 years now, 13 years. And those lenders who use my system have to go through examinations by federal and state examiners in checking the quality of their loans. And my system passed that muster. So it's a good system. But this is very similar to what a lender will assign to your risk rating score in your business. So you get a preview of what the lender is going to come back to you with. You already know what they're going to do by going through this program. Next slide, Jennifer. FIPCO, Wisconsin Bankers Association, FIPCO. I told Pam Kelly, the CEO, what we're doing in this seminar, this workshop, and I asked her, can we use some of your forms in our workshop? And we'll go through these forms because these are the forms you sign as a business owner, and she was glad to let us do this. So she's letting us use their note, their security agreement, the mortgage, which is for collateral, the personal guarantee, a personal financial statement, and the UCC1. So even WBA FIPCO sees value in what we're doing in our workshop, and they've allowed us to use their documents in training. So you'll get a copy of these documents to take home. And it's really fun reading if you have a hard time sleeping at night. You'll fall asleep when you read these. Next slide. This is the front page of the PowerPoint, I think. Did we go through all 20 slides, Jennifer? Oh, there's number 21. Okay. So we're going to get this, we're going to launch it on 14, 21, 28, and October 5th. The cost of the program is $399. That's like $33 an hour to sit through this program. And you're going to get some takeaways. You're going to have take-home things that will help you in managing your company. Next slide, Jennifer.
That was it. Sorry.
Oh, there we go. Yeah, here's the cost. Every person who's attending the program must have a business plan with them. It's a completed business plan. And we will need projections for the next 12 months. And with the data in the business plan and the projections, we put your data through that analysis system and we come up with your risk rating. And we can answer your questions about your company's risk rating between weeks if you want to talk about that. But that's going to be very helpful when you go to present your loan request to the lender. There are two lenders who have agreed to do this. One is Jeff Scheffler from Bank of Little Chute, and the other one on hold right now is John Nygaard from Community First Credit Union. I know them both. They're both very good lenders, and they're relationship lenders, not just a transactional lender. They're interested in the success of their business clients. Amy Peach is very much behind this at the Fox Valley Tech, the EC program. She's been part of this since last year when we started working on this curriculum. And she's allowing us to use the Blackboard system. If we didn't have the COVID, we'd be doing these presentations at the Bordini Center. So Fox Valley Tech, Amy Peach Venture Center is behind this program. Pam Kelly at FIPCO WBA. Jennifer Brown has helped encourage and support this program through the chamber chat and the chamber efforts. Our SCORE chapter in Appleton, we cover an 8-county area, Appleton, Oshkosh, Fond du Lac. They're behind the program. I have not seen a program like this anywhere where we take an entrepreneur who has completed a business plan and now it's like, okay, go out and get your loan. So we refer to this like the bridge from that point to getting the loan. There's some really important things the business owner needs to know to be able to effectively and successfully negotiate a loan request from a lending institution. And what's better than getting 3 or 5 proposals from different banks? Now you get to negotiate even better. Next slide, Jennifer. Jennifer, could you go back to the beginning of the presentation and go to the slide with Pat and Paul's pictures on it?
Sure can.
And that slide has contact information for Pat and Paul.
Oh, there we go. And so just for everybody that's on the presentation, the chamber again will post. I'm sure with Tony's permission, it's our intent to post this entire presentation along with the flyer for the workshop and the recording of this chamber chat. So you'll have all access to all of the contacts as well.
Yes. So the 3 of us, Pat, Paul, and I, we're all SCORE mentors. We're not doing this as SCORE mentors. We're doing this as 3 business owners who are very interested in helping business owners understand cash flow and succeeding with their lenders so they can grow their company. But there will be some tables and worksheets and takeaways out of this workshop that will really benefit any business owner who's motivated to want to grow their company. Pat or Paul, do you have anything you'd like to add?
One of the most important, excuse me, Paul.
Oh, go ahead, Pat.
I think, one of the most important things to get across here is this is not going to be 12 hours of sitting and listening to us kind of blah, blah, blahing through material for you. We're going to teach concepts and we're going to work with you individually so that, when you're done after the 12 hours, you've got something that directly relates to the business you have. And we'll work with you as we go through these workshops individually too. So, I think that's really important. And I think the other thing too is that all of us are pretty relatable. And so I don't want to scare anybody off by thinking, I'm maybe going to be in over my head with some of the, the backgrounds we've had and things like that. We really want to work, and that's why we're all part of SCORE. We want to work with small business people and help them become successful. and stay successful. And that also will make you much more attractive to the lender you're working with, bank or credit union. And that's really the goal in the end, because that's what we believe with our experience in banking is that what we were looking for too with the people, the members of the clients we're working with was to see them, successful enough to understand what their business is and be able to make that presentation to us as bankers, and then help us make a good decision to continue on and keep going with them and help them on their journey too. So I think that's the most important thing for me is that we're trying to apply the knowledge we have and experience we have to you as a person attending this workshop.
I can't really add to that, Pat. That certainly says it very well, except to emphasize that yeah, we're each available for private phone conversations or face-to-face if that works out as you go through that course. So, it's a big benefit in itself, I think. And I wanted to also thank Jennifer for all the work she's done getting us this far today. So thank you, Jennifer, for all of that.
Absolutely. Thank you for being here.
One of the other things that we're going to cover in the workshop, and I think some bankers might want to meet me at the OK Corral on Tuesday morning for doing this, but there's a way that the banks calculate the interest on your loans, and they use a 360-day or they use a 365-day basis. So we take you through that. And you want the banker to use a 365-day basis. Because in rough numbers, if you took a $200,000 loan out for 20 years at 6%, if the bank uses a 360-day calculation to calculate the interest they charge you, you're going to pay $12 a month more. But there really there's 365 days in a year. So if they use the 365-day calculation, which they should, you pay $12 a month less. And over the course of that 20 years, that's almost $2,800. No big deal, it's only 12 bucks. Well, why doesn't the bank give up the 12 bucks? Why are you giving up the 12 bucks? What's interesting about that rule, or that point of 360 versus 365, is on all consumer loans in our country, the banks are required to use 365. On SBA guaranteed loans, if that SBA guarantee is called by the bank in the event of a default, they have to use 365 days, not 360. So what happens? This 360 versus 365 becomes a negotiable item you can use to negotiate a cheaper rate. And Pat, we have a few minutes left here. Would you like to share, and no names or anything, but you went through this recently with a
I did. I
Sure.
did. I had a client that I was working with, and I went to them, and they had a relationship with the bank they were with, and I met with the banker, and at renewal time for the client, and sat down, and I expressed interest that I wanted the 365 calculation rather than the 360, which is what they've been paying for some time on this. And initially, the bank balked at me and told me they couldn't do it, a number of different things, which I knew from the experience that I had, most of them weren't true. It was just a matter of that's the way they wanted to do it. And in the end, I ended up getting a reduction in rate that matched exactly what I would have gotten, what the client would have gotten if we had switched from a 360 to a 365. So it's a really good example of, if you know what you're doing and you have the data behind you and you can support your argument, you can win.
And to Pat's point, in my example of 200,000 at 6%, on a 360-day calculation, the rate isn't really 6%, it's the 6.08%. So Pat got his loan at 5.92, which would be the same as 6%. So they can either change the calculation, or they can lower the rate, that micro percentage, to effectively give you a 6% rate cost on your loan. On a consumer loan, it's known as the annual percentage rate. So if you go to borrow money for a home, you're going to borrow $200,000 and the interest rate on the loan is 3%. The bank will add the cost because you have to pay for the appraisal, you have to pay for title insurance, you might have to pay for an environmental or a survey. All those additional costs are part of your loan, which are not interest. So that raises the annual percentage rate from 3 to 3.12. That's why on consumer loans, you see a APR that's different from the interest rate. In business lending, you're not required to do that. They don't have to do that for you. They don't have to disclose it because business owners are supposed to know how this works. That's really what happened when the government set up that rule. Well, we'll protect the consumers because they're vulnerable, but the business owners should know that they're in business. Well, not true. But at the workshop, we empower you, we arm you, we forewarn you, so you can go to the bank and you can negotiate. Now, I don't mind if you say to the bank, well, we learned it at the prior workshop. Prior told me about that, or Lowney told me about that, or Dozier told me about that. We don't care because you can negotiate that.
Tony, I think, you make the point it's a small amount or small interest rate, but I think in the context of surviving through this pandemic, every dollar counts. Well, I mean, and so if you're in a survival mode, you're watching cash daily. And this is just part of that mindset, I think, that's critical to getting through it.
Yes.
My humble opinion.
Tony, do you want to take see if there's any questions? We have 5
Sure.
minutes.
Absolutely.
I don't know. I didn't see. I'm not actually the host. My office is, so I just want to make sure I'm not missing any questions there in the last 5 minutes.
You bet.
Just to
Anyone-
chime in, Jennifer.
Yep. Go ahead.
I do not see any questions that have popped up like through
Thank you.
Q&A or through chat, but if there's anybody on the call that would like to, they can unmute themselves to ask a question, or they're welcome to put that through the chat or the Q&A. We're happy to field those in any way that's most convenient.
Thank you, Tanya.
Sure.
In the meantime, Jennifer, I've had this statement. I've heard this many times. Well, my company doesn't have enough cash flow to budget. What am I going to budget? I just don't have enough cash flow. That's a serious mistake, and it's an oversight because it's easier to budget a smaller amount of revenue and expenditures in your first or second year than it is to try to get your arms around that in year 3, 4, or 5. And if you do a budget in the beginning, it helps create the disciplines to manage your company more intelligently and be more successful for those first few years. Don't ever start a business without a budget. That's my advice. It's not that hard to put one together. Pat or Paul, do you have anything?
No.
Teresa, do you have any question?
I was just wondering, since I don't know if I can wait on the time frame here, if I would pay the money to you guys, would you walk me through the program ahead of time?
Let's talk about that after the workshop. I think we can work something out there. Let's try to make an arrangement on that.
All right, all right.
And you know Paul, right? I saw you.
Yeah, yeah.
Why don't you give Paul?
I know you. Well, I don't know Pat that well. I know you, Tony. I know
Yep.
Paul, but
Call Paul or me after the show.
okay.
Paul's number is right there on the screen.
Yep, I got it.
Fast as yet to come, Teresa.
All right, sounds good. Thank you.
Teresa's been on Biz Talk, Tony. It might have been, or Pat, might have been while Tony was doing it. I don't recall.
Yeah, Tony was doing it when we were on, and our whole action plan and everything we're doing is totally different now.
Yep. It changes,
So,
doesn't it? It
I
changes
can't wait
quickly.
to share all that with you both.
Love to hear it. Absolutely. Well, Jennifer, thank you again for providing this opportunity for us to talk about the workshop and how important it is going to be for business owners who are motivated to grow their companies. especially when it comes to securing bank financing. It's such a critically important part. And if people are going to start their company and get a loan from mom or dad or themselves or a friend, they should still go through these motions, because it's good training and it disciplines them for when they do need a bank. Thank you, Jennifer.
Thanks, Jennifer.
Thank you so much to our panelists, our expert panelists, for providing some very insightful information, and that is useful not only during this stressful time for our businesses in the Fox cities in Northeast Wisconsin, but really anytime. So certainly, as I mentioned a couple of times in the workshop, we will get this information posted, get the slide deck posted, and we will have the recording posted as well. And also the flyer for the workshop. So any attendees today will be able to view that, the information, and you can also email me directly or the chamber, the info box at the chamber, if you have any other additional questions and need to reach out. So thank you for attending. We appreciate your time this morning, and have a good day.
Thank you. Goodbye.
Thank you.
Bye.